I guess I'm becoming the $5 a day guy, but I got this epic question on the last video I did, and it's this one right here. Do the same type of video, but use 2008 as an example. Now, that is an epic comment. And for those of you that might be too young, dear God, I feel old if you are, but let's say you're too young to remember 2008, 2009. That was what we called the Great Recession. So what if we would have done the $5 a day investment challenge back then? Well, I did all the math for you. I did all the little crazy Excel because we're going to dig in and show you the difference. Now, if you haven't seen the last video that I did of my $5 a day for the last 1,000 days, let me just give you a quick preview. Back in January of 2022, I got this clever idea of saying, what if somebody that doesn't have a lot of money, that is afraid of not being able to invest at all, what if they were just like, instead of worrying about like $10,000 or $25,000, they just invest $5. Cut out something simple out of your budget and invest $5 a day or $155 a month into a simple S&P 500 fund. And I thought, well, in order for me to simulate this, why don't I just put my money where my mouth is and do it myself? So for the last 1,000 plus days since January of 2022, I did just that. I'll give you an update here as of Monday, October 14th, as to where my S&P 500 stands. You can see right now, as of the recording of this video, it's going for $536 per share. That is insanely wild. My God. So if we come down here, total of 12.7 shares, and I'm up 31.5% or $1,641. That's above and beyond what I put in with my hard-earned money, and that's the beauty of investing. But, you know, it's been a nice ride. I mean, the S&P 500 just this year alone in 2024 has hit all-time high after all-time high. So, sure, it's easy to come on this video and say, look at me, I'm up 31% in only just $5 a day. This looks great. But what if it was 2008 and the market just keeps going down, 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 down? Let's simulate it. And what we're going to have to do, I hate to say, is we cannot use VOO. Even though I'm investing in VOO, that particular ETF index fund only started in 2010. So I can't go back to 2008 with VOO, but I can go back with its competitor, SPY, because that is an older fund, and they both track the S&P 500. So it still is a comparison of the S&P 500 funds. It's just I got to lean to the SPY because it's an older fund, and it'll actually give us relevant data to the year 2008. You ready to get started? Buckle up, it's gonna be a good one. Let's hop over to the screen. Now, there's a couple things I gotta tell you about. Like, first of all, if you're part of my Patreon, you're gonna get this whole entire Google Sheet for free. So for a simple $5 a month, not a day, a month, you can join me over there if you wish to do so. You'll get access to all these things I share on all my videos. But what I've done here is you can actually plug in whatever fund that you want to. So we can go back to VOO, and what's really cool, you're gonna see that this thing automatically updates all the figures. So let it do its thinking, there we go. It's gonna update the price, the shares bought, and it's gonna simulate your portfolio of investing $5 a day. You can also plug in right here whatever day you started. So for me, I started January 1st, 2022, and I basically simulate this through. Now, it does not factor in dividends paid. This is not going to be perfect math. This is just an example, guys, just to give you an understanding of base level nominal value, not dividends reinvested. I'm not going to worry about that right now because it's still going to be interested. In fact, I'm actually shortchanging myself. We would actually have a little bit more money if we figure in the dividends, but I'm not going to worry about that right now. So here we are on VOO. Now, if I scroll all the way down, this is the current, right? So if I come all the way down here, we're going to see, without dividends reinvested, the data goes to October 11th, right? So we have a total of 12 shares. That's indicated right here at 12.48, with a total portfolio balance of well over $6,000. Pretty sweet, and that is actually an annual growth of 23.69%. And again, the difference that you saw from what I just showed you is the dividends, just to beat the dead horse one more time. But what we need to do here is say, what does this look like comparatively to 2008? So in order to compare apples to apples, I'm going to scroll back up here and I'm going to type in SPY, so that way we can truly see what the difference would have been. Come back down here. So October 11th. Okay, so October 11th, 11.4 shares. Try to remember all this for me, okay? 11.4 shares. We got $6,652 total portfolio balance. Now take a look at how much we invested. Only $5,000. That's your little $5 a day that you've been putting in from January 1st, 2022 until October 11th, 2024. Long period of time. You put in $5,000 of your hard-earned money, but you grew an additional $1,600, okay? But let's say we started this in the year 2008. And what we're going to do is we're going to keep SPY on here, but January 1st, 2008 to the same exact time period. So we're comparing, basically January 1st, 2022 to October 11th, 24, same period of time from 08 to I think it's like 2010, 8, 9, 10. Yeah, I think right around there. We'll see it in just a moment. But here we go. Now, things get bad, and you can see this happen. Like SPY, first of all, wouldn't we love to buy SPY at only $100 a share? Don't we wish we would have back in 2008? And if you did, congratulations, let's go get a beer sometime. But look down here, okay, so things get pretty bad. If we go down into where the Great Recession started really crapping all over the place here, look at how bad this gets. Look at this. Back in October of 2008, we're down below $100 on SPY. That's terrible, right? And by the way, thanks to Google Sheets for just being so badass about being able to just load this stuff in. You just plug it in and it automatically does all this. Super cool. I love it. It gets even worse. I mean, it's just a bad time. Look at it, $70 a share, and what is that, $68 a share. And if you look, so I want to pause right here in March of 2009. So it's March 8th, 2009. You pull up your portfolio, or let's say that it's me and I'm sitting here saying I invested $5 a day from January 1st, 2008 to March of 2009. And I would sit here and show you that my portfolio dropped by 62.57%. How many of you would subscribe? How many of you would unsubscribe? And how many of you would just trash the comments with like, this guy is the dumbest person in the, like, you could have stuffed $2,165 at this point under your mattress, and you would have had more money than you did doing this, because now you only have $1,331. This guy is completely stupid, right? Like, and I would kind of maybe agree with you if I was a rookie. So this is where we need to have a serious talk here, because at this point you need to make a decision for yourself. You need to say, why did I do this in the first place? Is my goal just to invest $5 a day and see what happens? Because that is the tricky thing, and that can be a little bit dangerous, right? Because if you're just going to see what happens, you're going to freak out if it drops 62%. You lost 62% of your hard-earned money. I have a problem with that. I don't know about you, but is that really your goal? My goal is to invest long-term. My goal is to get into the green. I'm going to keep on going. I'm going to keep on doing it until I make money. And if that means this is going on, I'm definitely going to keep investing, because right now I see this as a discount. I mean, the fact that you're almost buying, look at that, you buy $5 and you get 0.07. You're getting a lot more than you would typically if it was a lot more money. Like if we go back here, look at how much money we're getting. Like, so for $5, the way SPY is set up right now, we're getting 0.00862. Compared to back here in 2008, we were getting 0.07. You're getting more shares for less money. And the idea then is, as it grows over time, as that price shoots up, you get to ride the wave up as long as you can weather the storm. And that is definitely the storm, being down 60%. Let's go to the end. We hang on. We keep on just investing $5 a day, as indicated by this chart. Every single day, we're putting in $5. And here we are, October, apples to apples, October 11th, 2010. We now have a whopping 47 shares of SPY. That's a ton, because we were able to take advantage of the downturn. And as a result, and this is still kind of silly, but we put in $5,075 of our hard-earned money, and it grew to $5,558. You only made like $400 some, right? That's kind of dumb. Like, a lot of people would look at that and say, you did this for 2 years and only made $400. Like, I could have done like OnlyFans and made like $1 million. Just kidding. But still, like that's not a lot of money, right? But the trick is in the long-term mindset. Now, why don't we take this? So if we take 47 shares, let's say, for example, you stopped right here. You said, I'm done. I'm going to literally stop on October 11th, 2010, and I'm not going to do anything with the portfolio. I'm not going to sell. I'm just going to let it sit and rot. And then in 2024, I'm going to look at that portfolio again. I'm not going to touch it until then. So here we are. It's now October of 2024. We take our 47.65 shares, and we're going to multiply it by today's price of SPY. And I'm going to go over here to Seeking Alpha to just validate what the actual price is. As of the recording of this video is at $583.65. So we take our 47 shares, times $583.65, that gives us a whopping $27,000. So it's $27,810. Now look how much that grew. You were only at $5,000 back here in 2010, but because you just literally let it sit and rot, you're now at $27,000. That's the power of investing. That's the power of compound interest. And most importantly, that's the power of having a plan of what you're going to do when the market craps on you. Are you going to ride it out, or are you going to freak out and take a loss? I don't know about you, but I'm not taking a loss. Now, what happened if you were a gangster and you kept doing it? You're just like, I'm just going to keep investing $5 a day forever. Well, let's see what happens. I calculated that as well. So on this sheet, same scenario, SPY, dating back to January 1st, 2008, and we're going to scroll forever, because I got to go all the way from 2008 to 2024. So like, look at all this time that passes. It's just absolutely absurd. We go through the terrible recession. We go through all this pain and agony. We go through 2020, right? Like all kinds of crap happens here. Oh my gosh, I'm still scrolling. Come on, get to the point. Where's the bottom of this thing? What is your portfolio balance after investing $5 a day from January 1st, 2008 until October 11th, 2024? Here's the big reveal, guys. Look at this. Your portfolio balance right now as we speak is $92,082.88, representing a 66% improvement on your price. That means your hard-earned money over all that period of time, that $5 a day, you only put in $30,000 and you got back $92,000. So that's the answer to your question. What would have happened in 2008? But I don't know, because it all depends on what that person did. So even though we're looking at this beautiful little simulation, which is actual facts and data, you could have pulled out your money. You could have sold. You could have done goofy things with the portfolio that didn't get you to the fact here of earning $60,000. In fact, I just want to have some fun here. So if we take 92,082.88, you minus that by 30,645, you earn 61,437. Now that's a total of 16 years that have passed us by. So if I take 61,000, let's divide it by 16. Divided by 16. That is $3,800 that you're earning per year just in investment. That's your money working for you. So your money's out there like making more money, and it's rewarding you with a bonus, right? A bonus of $3,800. Does some people do, but does your company offer you a bonus of $3,000? Maybe, maybe not. But see, imagine if you would have invested more than the $5 a day. Man, you'd be killing it, especially if you invested during the recession. If you started pouring your money in during the worst of times, you are probably so unbelievably wealthy right now as long as you didn't touch your portfolio. I also want to show you one last thing before we go, and this one's really important. Let's go back to the worst of 2020, March of 2020. Now, because you've invested during the pain and agony of 08 and 09, but most importantly, because you've invested for a longer period, the people that have invested the longest are typically the people that are the wealthiest. In fact, I did a video in January of 2023 when I was still down on my $5 a day. And just the other day, literally 3 days ago, I got this comment. Obviously, this person only watched that video from 2023 and did not see the latest update to see that I'm now up on my money. But this is the mindset of a lot of new investors. They think, well, you're down early, so I'm just gonna take my losses and get out of here because it's not working. But if you wait, if you just keep on top of your plan, you're gonna be better off in the long term. Go to Google, do a search of investment returns over time. There's a lot of great articles that actually show you the differences between what happens and the percentage loss versus the percentage gain over time in portfolios. And as you'll find, the longer you invest and the longer you hold on, you have like almost a 90% or 99% greater probability of a positive portfolio than you do a negative one, despite the crashes that can happen. So going back to my point here, even though you invested during that period of time, when everybody else was freaking out in March of 2020 and those new investors were hurting on their portfolio, look at what happened to your portfolio in March. You're still positive. You see this? We're still positive 40%. You do drop here. You can see this is a bad day. You dropped right here. You dropped to 35%, and then you drop down here to 33%, and here's some 20s, right? So your portfolio is taking a beating from where it was, where you were up 52% up here in February of 2020. So it's bad, but you're not negative. You haven't lost technically money. Like your hard-earned money hasn't dipped below that. But because you've invested for a long period of time, you're able to weather the storm of what was a pretty significant, pretty quick downturn during the freak out of COVID. That to me is pretty magical. And so always be ready for that kind of stuff, but also think about what your plan's going to be. Are you ready to invest $5 a day? Well, you can get yourself started with some free stocks to get you kickstarted by joining me on Webull. I'll include a link to that in the description below. Let me know what the next video is by dropping me a comment so I know what to come back with. But until then, check out this video and we'll see you on the next video.